Felix here, and my head of operations just said to me, Felix, do you realize there's a massive SoFi opportunity coming up that most people don't understand? And I said, no, tell me more. And then I realized she was my cat, who is my head of operations, research, and financial analysis. And she sleeps a lot and she comes up with some great ideas. And this is one of them. Now, if you look at the chart here, you can see that SoFi is down something like 69% still from the all-time highs. I've also got on here Upstart and Affirm, both down basically the same. And that makes you think, oh, fintech all moving together. Why is that? That's what I want to explain to you. And I want to explain to you what's about to change and which of these three stocks is actually going to be the best place to invest in. Is it just SoFi? Is it all three? Is it one of the others? We're going to compare their data points and it'll make you the best informed SoFi-esque fintech investor there is out there. And if you want to learn how we actually make money at the same time, you are very welcome to. Because we did 126% return on capital employed in 2022, 105% last year. And I will teach you the exact three-step system. Banker's not very good at counting. And how we automate those trades, how we do that in like 2 or 3 hours a week, and how it's totally beginner-friendly. You want to come and learn with me today at felixruns.org/webinar. I'm running a live trading training where I'll give you my whole system, my whole structure, all the automations, everything presented to you. It's free. felixruns.org/webinar. Check it out. So let's get into this then. What's this chart all about? Well, there is one important bit on this chart that I didn't mention in the opening because I thought it would be a little bit too much information. But there is a red line on here. And what's the red line? The red line is interest rates. And you might be thinking, Felix, interest rates have not been coming down. No, I did a sneaky thing. I turned them on their head. So this is upside down. You're turning me inside out. If you get that reference, you're giving away your age. So as interest rates go up, 5% is down here. 1% was up there. Fintech is cratered. And this isn't actually interest rates. This is actually the US 10-year Treasury yields. US10Y is the ticker for that if you wish to look it up. And we're about to see interest rates come down. Maybe not this week, maybe not this month, maybe not even in May, possibly not even in June, but at some point this year. Papa Powell has promised it, and what Papa Powell promises, he delivers. You have to trust the man, upstanding member of society. He said, I'm going to print more money than anybody ever did, and he did that. He then said that inflation was transitory. And if you look at a long enough time frame, it's always going to be transitory, much like life. So anyway, okay, enough piss taking out of the chairman of the Fed. But what do you get when you are down 69% and say your interest rates went back to where they started? And maybe they weren't entirely, but to get in that direction. Well, you'd need a 223% gain to get back to where you started. That's what happens. If you're down minus 69%, you need to go up 223%. That's also one thing why in trading, we aim not to lose any money, right? Not losing money is really the key object there. Now, I've got here on the screen, and I'll try to show it all at the same time, Affirm top left, Upstart here, and SoFi at the bottom. And let's have a look who's actually doing best. If you compare this, well, SoFi is clearly the best growth. Upstart's a disaster in terms of profits. But other than that, they are quite similar businesses in terms of stage right now. So let's dive a little bit deeper then. We kind of know what they do, right? Affirm is basically, well, how do they describe it? Digital and mobile first commerce enables consumers to pay over time. So it's a credit, buy now, pay later or never business. Upstart is cloud-based artificial intelligence lending. Everybody put AI in their descriptions and they were hoping that their valuations would go up. And SoFi it's a good old bank that came out of student loans. You might realize that. So let's again look and compare here. SoFi at the bottom. Sorry, I just moved that so the names got away. So who's got the best margin? SoFi, right? Who's got the best profit margin? Well, SoFi is actually just profitable. So the data is a little bit out of sync here. But as a percentage of revenue, SoFi wins once again. Who's got the best return on invested capital? It's SoFi. Who's got the strongest long-term earnings growth? Well, actually, it's Upstart, in fairness. I mean, not that they have any profits yet, as far as I'm aware, but SoFi coming in as a second here and Affirm being a bit of a disaster. Okay, so far, SoFi is looking rather good. What about free cash flow? Who's got free cash flow? Well, Affirm has free cash flow. 33 million, not a lot. SoFi doesn't, but it's a bank. It's not really the business model. It's not really the point to have money sitting around you're not doing anything with. So I don't think these free cash flow things particularly relevant here for SoFi. So far, we're looking all right. Who's got the smartest management, the most consistent management? The number is a little bit small now, but you're looking for how many red outliers do we have? We had 1, 2, 3 misses here on EPS, so 3 misses. For Affirm, 0 doesn't count. The 9 is 1 miss. And SoFi, okay, technically you have these two, but that was really 1 cent, and it was when student loans got culled. So, but yeah, we should count that as 2. So, looks pretty similar to Affirm here, right? So pretty good management over at Affirm. What about valuations? Well, the first two are not making any money, so they got a negative PE, which is pretty meaningless. Whereas SoFi right now has got 100-something times 2024 PE because they've only just started to make a slither of a profit. So not particularly useful, right? So what do you therefore do with this information? You have to look with growth companies at quality of product in management. What's revenue growth looking like? Are customers happy, right? And is anybody eating their lunch? I personally, out of the 3, like SoFi. Why? Because they said they'd become a bank. They became a bank. They seem to have pretty happy customers. They have beaten Wall Street expectations every time. Why? Because they sandbag very nicely. I think they've got a very smart CEO. But ultimately, the reason I like it is because I think interest rates are going to come down. Why? Because commercial real estate crisis, banking crisis, US debt levels, they all require lower interest rates. So whoever is going to lead the Fed at some point in the future is going to have somebody lean on him and say, you better lower interest rates or I shall lower you. And of course, it's an entirely independent institution and there is no such thing as undue influence or corruption in the US. But no, rates are going to come down. And when rates come down, fintech goes up, lenders go up. Historically, and therefore I like it. And I think a lot of people don't understand this. So I thought I'd explain it to you. And if you find this useful and helpful, well, first of all, come and join us and learn how we make money. felixfranz.org/webinar, and how simple it can be, and share the video. Thanks for watching. So if you look at, for example, Georgia's power forecast has increased massively, or Ohio has basically said, we can't really handle the data centers in the chip plant. So the demand, as I say, twice what it was before. Now that creates an opportunity, doesn't it?